although he doesn't need any introduction, but formally I would introduce him. Mr. Vinod Kothari, with offices in Mumbai and Calcutta, is internationally recognized as an author, trainer and expert on specialized area in financing and company law also. He has more than 25 years of experience. He is the author of the book titled Securitization, the Financial Instrument of the Future. Apart from that, he is also one of the specialist editor of Company Law, a Ramayya's Guide to Company Law, 2011 edition. He is a regular speaker in various forums. I would request everybody put your hands together for CA Vinod Kothari ji, please. May I now request Uttam Agrawal ji to please come forward and offer a dry fruits bouquet on behalf of all of us and EIRC to the learned speaker, please. His PPT which we have received has been uploaded in our website eirc-ici.org. eirc-ici.org. You can go to the resources part, and under the resources part there are background material part. You can go and you can download his PPT. Apart from that, any PPT we are receiving for any of the seminar, any background materials of last 1 year, you can download from there. Apart from that, we had also come out with the various committees which I am chairing has come out with 11 references. So those references are also there. You can also download. You go to the resource part and you will find a referencer section there. So all these are there. May I now request Kothari ji to please start.
आज फ्लोट पूरा नहीं
मैं 2 मिनट
सपोज फ्लोट पूरा आपके साथ तो Very good evening, everybody. I think for a change, you are discussing a topic other than demonetization. For the last, I think, almost like more than a week, the entire nation has been discussing one and only one topic. I think I must appreciate that you could find time out to discuss on a topic other than demonetization today.
Even we have got so many calls for this demonetization issue. So ultimately we have to kept one topic on Tuesday. So on Tuesday we are having SS Gupta and Subhas Agrawal ji for demonetization, because you people received called so much. So we have to keep it.
At what time, sir?
5:30, same time, Tuesday. 5:30. 3 city hours.
So one of my recent meetings, these two topics were there, demonetization and bankruptcy code. And to begin with, we started by saying that, well, if demonetization, the way is being talked about, there's a 30% plus tax, and then there's 200% penalty on that. So obviously, it would probably lead to more bankruptcies. So therefore, the relevance of bankruptcy code. Maybe I'm not sure whether chartered accountants or their clients, but yes, bankruptcy code will become relevant from that perspective also.
If it is deposited in a loan account,
So,
other than a
I think-
regular current or savings account, then
so let's maybe preserve the queries for the meeting guessing next Tuesday. But this is not a topic on which, well, the other day, well, there was a talk on this topic, and I think, I don't know, let's not maybe start discussing on that topic, but mostly people felt that 115 BBE is the section that provides the answer, but please do preserve your queries for the meeting that Nitesh just talked about, and I'm sure there are expert speakers who would talk about this. With your permission, however, I'll talk about bankruptcy code. Right. So, our objective today is to talk about professional opportunities for chartered accountants and, well, of course, other professionals under the bankruptcy code. And I'm sure most of you must have had a general idea of what is the bankruptcy code all about. No idea at all. Okay. So let's start with, let's first building up a quick idea about what is the bankruptcy code. This is a new law, already enacted, already passed. Several sections have already been enforced. The entire act has not been enforced as yet, but several sections have already been enforced. And as recently as on 15th of November also, there was a notification notifying several sections. Now, so in tranches, the law is being enforced. It's called code, but actually it's no different from an act. Like civil procedure code is called a code, but it's an act. Criminal procedure code is called a code, but it's also an act. Similarly, for some, I mean, I don't know whether probably to align with the US law, this law has been called bankruptcy, insolvency and bankruptcy code, though it's actually no different from a normal law. Now, as I said, this law has already started coming into force, and the impact of this law will be multifold. Number one, insolvency of companies. When we talk about insolvency of companies, we are looking at number one, sickness of companies. So Sick Industrial Companies Act ceases to be of relevance because all proceedings for revival of companies will move under this code. Likewise, the age-old section 433 of the Companies Act, I'm sure all of you recall, 56 Act, 1956 Act, section 433, we used to use it whenever there was a default. We used to send a notice on the company that if you do not pay me my dues within 21 days, I'll file a petition in the court for winding up of the company. That proceeding or that section actually has already become redundant because, as I mentioned, the 15th November notification has enforced the amendments to the Companies Act done by this law. So section 271 of the 2013 Act or section 433 of the 1956 Act have become irrelevant. Likewise, the voluntary winding up of companies, which is currently under the Companies Act, that is also shifted from the Companies Act to the court. So any solvent company, insolvent company winding up is separate process, solvent company is a separate process. So the process for winding up of solvent companies also has moved from Companies Act to the Bankruptcy Code. Likewise, insolvency of non-corporate persons. For example, let's say a partnership firm is unable to pay its claims, or let's say an individual is unable to pay his claim. The individual or the firm need not be necessarily engaged in business. For example, even let's say a normal consumer who has taken a loan from a bank, let's say is unable to pay his loan, right? In that case, the bank may file for his first is insolvency under this code, and if insolvency cannot be repaired, then for his bankruptcy under the code. So insolvency and bankruptcy of non-corporate persons also comes under this code. So this law actually merges lots of existing laws into one single piece of law. That's why it's probably called code, because it codifies several existing laws into a single code. Which all laws therefore will become irrelevant after this law? SICA will obviously become irrelevant. I'm sure you all understand that for insolvency of individuals, there used to be very old laws. Presidency Towns Insolvency Act 1909, Provincial Insolvency Act 1925. These were pre-independence laws passed by Britishers. They were ruling the insolvency framework of the country for almost like 100 years now. These laws also stand deleted because once this law comes into force, those laws will stand repealed, and therefore those laws also come under this law. So the entire process for voluntary winding up, the entire process for compulsory winding up on account of default of claims, the entire process of revival or restructuring of companies, entire process of revival or restructuring of non-corporate persons, all of that moves from those different laws I talked about into this law. So this is therefore a very important piece of law. Whenever there is a default, I mean default in what? Default in payment of, let's say, a financial claim. For example, there is a default of a loan, this law comes into place. If there is not a default of a loan but default of, let's say, some other obligation, let's say somebody has supplied goods or services and the buyer has not been able to pay the claim, then also this law comes into place. So this law is a very significant law because it changes the landscape of defaults in the country completely by enactment of this law. So let's first start with a quick understanding of what all things are covered by this law. I'm sure you understand that this law is basically culmination of a process. Though the attempt to rewrite bankruptcy laws in the country have been there from 1960s, almost like 60 years, 50 years of history of rewriting, but that rewriting could not happen for, but there were vested interests trying to, stall this lawmaking. But this particular, credit to this government, you might blame the government for whatever else, but as regards the Bankruptcy Code, it's very commendable that in very short span of just about 1 year, little more than 1 year, the process from constitution of the Bankruptcy Law Reforms Commission to the drafting of the bill to the enactment of the code, everything has been done at a very, very fast pace. And today I came to know that the government is keen, that they're probably getting a pressure from the PMO itself, that as early as on 1st of December, the process of compulsory liquidation of companies, mergers of companies also, should get rolled before the NCLT. So they're probably working very fast. That's why I mentioned on 15th of November itself, several sections of Companies Act have already been moved from the Companies Act to the code. So they're trying to be extremely fast in giving effect to this code. I'm sure you all are either practicing professionals or you are working with, let's say, companies. So for chartered accountants who are, let's say, in practice with substantial scope, for chartered accountants who are in employment, once again you might be relevant, the law might be relevant because your company may be one of the companies against which these proceedings may be launched by somebody, or your company might be wanting to launch the proceedings under this law against one of the companies which owes money to you. So if there are people working with banks or financial institutions, this law is extremely important. If there are people working with, let's say, non-financial institutions, non-financial companies, also the law is important. And for practicing professionals in any case, because this presents a completely new opportunity for a focused area of practice. In case you want to specialize on this law, this is a new area of practice. Why do I say it's a new area of practice? Because going forward under this law, resolution of companies, let's say company goes for a default. Currently, I'm sure you understand that if company goes for a default, there is a process under SICA. You file a reference before SICA. Now, chartered accountants could never appear before SICA, BIFR, because BIFR appearances were limited to legal professionals only, lawyers only. So CS could probably at most do a background work, but appearances were done by lawyers. If the matter moved from BIFR to, let's say, AIFR, which is the appellate authority, there also chartered accountants could not argue. Now the revival of companies is moving from the BIFR or IFR would cease to be of any relevance and the proceedings move to NCLT. Before NCLT, can chartered accountants appear? Answer is yes, chartered accountants CS can appear. Next appellate forum will be NCLAT. Before NCLAT, appellate body also, can CS appear? Answer is once again yes. So CS can appear right before NCLT, NCLAT. It's only when the matter moves to the next stage, which is Supreme Court, but that's where I think chartered accountants will not be able to appear. But also, please do understand that revival of companies is not all about appearing. It's not all about appearing and arguing the case before NCLT. Revival of companies is more of a financial discipline. Because you need to understand why the default has occurred, what can be done to rectify the default. Are there some non-core assets which could be sold off to recover money? Are there any unrelated operations which could be curtailed? How to stop the pilferage of money? How to allocate resources properly so as to pay those creditors who are creating more, let's say, pressure. And so all of this is financial. All of this is, so it's a mixture of financial understanding, mixture of credit, mixture of finance and a mixture of law. And that's where chartered accountants definitely have an upper hand as compared to legal professionals. So this presents an extensive opportunity for practice to CAs. Also understand that if let's say the company moves from revival phase to a liquidation phase, Let's say revival doesn't occur. Revival is not possible. Then what's the next step? Next step is liquidation. Now under the existing framework under Companies Act, can you act as liquidator of companies? Yes, we can. Even now we can act as liquidator. Most of us don't actually do that because most of us either are not equipped or we have very little cases of liquidation of companies. We ourselves are acting as liquidators. Voluntary winding up, we are acting as liquidators. Even compulsory winding up, you can act as liquidator. The only thing is that in case of compulsory winding up, typically the court will appoint the liquidator and the court will designate the official liquidator, which is actually an officer of the MCA, as the liquidator. Under this code, all liquidations of companies will be handled by private liquidators, which means CAs or company secretaries or lawyers can act as liquidators of companies also. So the entire practice of liquidation will also move from official liquidators to private liquidators, which is also where CAs can offer services. So in terms of professional opportunities, it provides a great opportunity. Chartered accountants can think of arguing before NCLT, they can think of handling liquidation of companies or revival of companies, or ultimately they can also think of, let's say, handling revival of individuals. Let me straight first come to some of the laws, the laws that get affected by this particular law. So SICA becomes completely repealed. Once this law comes into force, SICA will be completely repealed. What about CDR, SDR or S4A? CDR, SDR, I'm sure all of you are aware. When large amount of loans become defaulted, large size loans become defaulted, typically the bankers refer to a JLF, Joint Lenders Forum. Later on they take it to SDR, Strategic Debt Restructuring. Now the RBI has come up with a new scheme called S4A, SSSA, Sustainable Scheme for structuring of stressed assets. Sustainable scheme. So sustainable part of the loan is restructured, unsustainable part of the loan is converted to equity. So all of these schemes, they will still remain relevant. They will not get repealed by this law. And there's also a law called SURFACE Act, Securitization Act or SURFACE Act. What happens in the SURFACE Act? Whenever a loan becomes a non-performing asset, a banker sends a notice under SURFACE Act and the bank has a right to repurchase the asset. So what happens to SURFACE Act? Will the SURFACE Act also get repealed or will it remain still relevant? SURFACE Act will not get repealed, will still remain relevant. Only difference is that during the process of revival, that is restructuring process, SURFACE action will remain stayed. So there will be a stay on enforcement of security interest, that is repossession of assets during the period of restructuring. So I think straight come to number one first, giving an idea about existing scenario of laws prior to the code and then what happens after the code comes into force. So first let's look at existing scenario. If there's a default by a company defaults in payment of its obligations. Currently what's the scene? If a company is unable, company doesn't pay, let's say there's a loan, the company has borrowed money from bank and the company is not paid. What happens at the existing scenario? Let's probably make it a little interactive so as to, I think, break the silence. What happens if the company defaults, the company does not pay to its banker? What happens? What does the bank do? Surfacing. The loan becomes non-performing asset. So the bank classifies the loan as NPA. If the loan becomes NPA, I'm sure some of your bank auditors also, there's a question of provisioning. That's something internal to the bank. But as regards the borrower, what does the bank do?
They will restore to SURFACE Act.
They will restore to SURFACE Act, serve a notice and repossess the asset. Can the bank also file, or can the company file a reference before BIFR? If the company is an industrial company, the industrial companies are covered by SICA, there is a loss of net worth, the company may also file a reference before BIFR. While the company has filed a reference before BIFR, during that stage also can the bank repossess the asset? Yes, no?
No.
The company has filed a reference before BIFR and the bank sends a section 13/2 notice, SURFACE Act notice. Can the bank come and repossess the asset even though the reference is pending before BIFR? No. Actually, yes, because even if reference is pending before BIFR, that does not stop the lender from enforcing SURFACE Act action. That's very clear from the overriding powers given under SURFACE Act. So that's SARFAESI Act prevails, even though the reference before BIFER is pending. So first of all, currently seen is for restructuring of companies. If it's a company, we go for SICA, that is Sick Industrial Companies. If it's not a company, in case of companies also, we can go for what we call informal restructuring. Like they can be a CDR, SDR or S4A. Why am I calling it informal? Because there is no judicial body or quasi-judicial body tackling CDR, SDR cases. I'm sure you understand CDR, SDR is handled by the bankers themselves. Internal bankers combine together, bankers join together, they form called Joint Lenders Forum. They decide what to do, how to restructure, etc. So that's an informal restructuring because it's done by the bankers themselves. Typically the bankers will sign a DCA and ICA. DCA is debtor creditor agreement and then inter-creditor agreement among the lenders themselves, and then sign a DCA with the board. So the DCA ICA forms the basis of the restructuring done under CDR SDR. That's why it's called informal. Non-corporate, let's say it's not a company, but let's say partnership firm or individual who's borrowed money and defaults. What happens? The bank may still go for SARFAESI. There's no question of SICA in case of partnerships or individuals, because SICA is relevant only for a sick industrial company. It has to be company, right? So in those cases, there may be a case of compromise under common law. If at all the banker wants to do a compromise, let's say if the bank wants to do a CDR, there is a CDR scheme for SSEs, SME borrowers also. And in any case, the bank can always do an OTS. OTS, I'm sure you understand, is one time settle. The bank can settle. I mean, for example, you pay 50% or pay 60% and the bank may write off the remaining debt. It may be OTS. So it's still possible to do a compromise or settlement outside any law at all by way of an informal restructuring under common law. Now, let's say also that suppose when we talk about enforcement of security, SARFAESI action by lender. This is lender is trying to take care of his own interest. Lender is not taking care of interests of other creditors. For example, if let's say a UCO bank is given a loan to a borrower and the borrower defaults, UCO bank is trying to take care of its own interests. It's not bothered about interests of others. That's why we call it creditor remedy. It's not a holistic remedy. Holistic remedy is when the lender is trying to take care of interests of everybody. All stakeholders' interest is trying to be preserved in a holistic remedy. So holistic remedy basically is what? Typically in case of companies, it's winding up. Let the company go for winding up. Remember, if the company goes for winding up, not only the person who filed the petition for winding up, but all other creditors will be treated at par. Just because UCO Bank files a case for winding up does not mean UCO Bank will get a preference. Because in winding up, everyone is treated at par based on a priority scheme. Right? So that's why it's called holistic remedy. Because this remedy takes care of interests of workers, it takes care of interests of other lenders, it takes care of interests of even unsecured lenders in a way. So it's called holistic remedy. In case of non-corporate person, let's say partnership from individuals, if there's a question of holistic remedy, somebody wants to do a holistic remedy, then the idea is to file a petition for insolvency under those old laws I talked about, insolvency under the age-old PIA, Presidency Counts Insolvency Act or Provincial Insolvency Act, PIA or PTIA, 1905, 1920, long, very, very old laws. If the creditor himself wants to take action, simple action, the creditor may go for SARFAESI Act, or the creditor may do enforcement of security interest under common law. Common law, for example, let's say the pledge of shares. Suppose the lender has a pledge of shares and there's a default. What can the lender do? The lender may straight sell the shares. There's no need to come under SARFAESI Act because the shares are already with the lender. The lender may simply cause a sale. This sale is called a common law sale because the sale is happening not under SARFAESI Act but under common law. Common law in this case will be Contracts Act. Or if it's unsecured loan, for example, the banker has given unsecured loan, then what can the lender do? The lender may take action under RDB Act. I'm sure you are aware of this law also. Recovery of Debts Due to Banks or Financial Institutions Act. We commonly call it DRT law. Debt Recovery Tribunals exist under this law. The DRT law or RDB Act is basically for recovery of debts due to banks or financial institutions. A bank may also file a case under DRT law, RDB Act. Under DRT law, the DRT passes order. The presiding officer of DRT will pass an order to attach assets of the borrower even if the loan is unsecured. That's DRT law, or the bank may go under civil law. So this is the existing scheme of things. I hope this is clear for everyone. Please feel free if you have questions at any stage. I think it would help us to remain a little active instead of me speaking all the time and you are losing connect. So in case you have any questions, please feel free. So now under the bankruptcy code, what's the scene? After the passing of the bankruptcy code, this is what would happen. So resolution of companies, resolution versus winding up, what's the difference? Winding up and resolution, what's the difference? Resolution, we are trying to resolve the problem, because we believe that it's better to resolve than to take the entity into liquidation. Hope this okay? For example, if somebody falls sick, we don't kill him. We first try to ensure that the person revives. I mean, he's treated, he's revived. We first talk about revival. If we come to a conclusion that the patient is out of, I mean, it's beyond treatment, that's when we allow the person to probably put him ventilator and then eventually switch off the ventilator and allow him to die. Same in case of company. I think more significantly in case of companies, this process, because we first try to revive or resolve the financial problem. I hope you can understand that liquidation does not at all do justice to our society. Liquidating an entity basically means what? Is killing a business entity. If you're killing a business, you are actually taking away livelihoods of so many people. There are suppliers dependent on it, there are workers working there, there are probably customers who depend on whose business depends. So lots of stakeholders, their livelihoods depend on a business. Even cutting down a tree leads to so much of a furor. Cutting a business down and killing a business must be much more serious issue. Therefore, in the first instance, the approach is always try to restructure, try to resolve or restructure, or revive the business. So the first approach is resolution. Resolution in case of companies. So if a company becomes, let's say, defaulter, under the new law, what would we do? We would take it to the insolvency part of the bankruptcy code. We've used two words there. We said insolvency and bankruptcy code. IBC, insolvency and bankruptcy code. What's the difference between insolvency and bankruptcy? Can anybody contribute? What's the difference between insolvency and bankruptcy? Insolvency and bankruptcy, what's the difference?
Insolvency is temporary.
Insolvency is temporary. Then
Bankruptcy is permanent.
so insolvency is a stage which can be revived. But we have not come to a conclusion that the case is beyond repair. It's, for example, a patient falls sick, we have not come to a conclusion that the patient is liable to die. It's not a fatal disease. It's a disease which can probably be cured. So in the first instance, we believe that every problem can be resolved. So therefore, we first talk about insolvency. Therefore, wherever there is a default, we say that's a case of insolvency. Now, if we come to a conclusion that the insolvency cannot be restored, then we say that's a case of bankruptcy. If the company has become bankrupt, so first is insolvency. Then if the company has become bankrupt, we will have to take the company for liquidation. If the company becomes insolvent, the only option will be to take the company to liquidation, because there's no point in keeping the company alive if the company cannot be restored. So insolvency first, leading eventually to liquidation of the company. If the company becomes bankrupt, then we take it to liquidation. When we liquidate the company, what's the end result of liquidation? There's a dissolution. So insolvency, bankruptcy, finally leading to dissolution. Dissolution meaning the company is completely wiped out. That would mean the company no more ceases to exist. So insolvency, bankruptcy, finally leading to liquidation, dissolution of companies. So in the formal process, that is SICA goes away, because SICA will get completely repealed and resolution of companies will be done under this law. Informal restructuring, for example, CDR, SDR, etc., will they all remain? Answer is yes, they will still remain, because they will not be affected by this law. That process may still remain. Non-corporate persons, let's say partnership firm, individual, HUF or any other entity, defaults. So first stage, once again, resolution will be done under this law. A lender may file a case for insolvency under this law. So non-corporate person, let's say an individual who's taken a loan. Let's say somebody's taken a home loan and is unable to pay. So what can the lender do? A, the lender may once again go for SARFAESI Act action, straight repossess the house and sell. For example, let's say lender has given me an unsecured loan. A lender has given me an unsecured loan. What can I do? Huh? A lender has given me an unsecured loan, consumer loan. So now under this law, civil suit, I'm sure you understand, takes years. Civil suits in India, the problem is it takes years to resolve civil suits. So under this law, the lender may file for insolvency of the individual, right? Insolvency would mean the lenders will join together to see what can be done to revive, or in what will be the manner of resolution of the problem. If lenders come to a conclusion that the problem cannot be revived, in that case the person goes for bankruptcy. Second stage is bankruptcy. In case of companies, please remember the first stage was insolvency, next was bankruptcy, third was liquidation, dissolution. In case of individuals, what's the similar stage? I'm sure it cannot be death of the person. No? Insolvency, bankruptcy, sure enough it cannot lead to death. So it's not that I will be sent to jail or I will be asked to die. So if I become insolvent and let's say insolvency is incapable of repair, it will lead to bankruptcy. Bankruptcy ultimately leads to discharge of the individual. Discharge. That is, after a certain time the individual gets a discharge. That is out of the slur of bankruptcy after some time when he gets a discharge. Until discharge, the person is called undischarged bankrupt. I'm sure you would have heard this term several times. Earlier we used to use a term called undischarged insolvent. Now that the law has made a difference of jargon, we will now say undischarged bankrupt.
Sir, is this all this payment is related to only in case of loans, or if I have debtors only?
Not necessarily.
Sir, suppose there is a plant and it is not paying
Workers,
the
yeah.
workers. Can all the workers?
Of course, yes. Yeah. So as you would just discuss in a brief while from now, there is a difference between what's called financial creditor and operational creditor. Financial creditor will include people like banks, financial institutions, debenture holders, those who given up money, credit facilities. Then the word operational creditor will include something like workers, suppliers of goods and services who have not been paid. So workers who have not been paid, it will come under operational creditors. Operational creditors also have a right to file. You very shortly will discuss under what circumstances who can file for insolvency. So financial creditors as well as operational creditors both have a right to file for insolvency. In case of individuals, there is no distinction between financial creditors and operational creditors. So any creditor can file an insolvency application. That would mean, for example, an employee has not been paid, employee working with a firm has not been paid, the employee can file for insolvency of the firm. So insolvency, bankruptcy, eventually leading to a discharge. And we'll discuss when does the discharge happen, etc. So non-corporate persons also, the entire process will be run under this act. The adjudicating body, that is the way we will file the case. For example, I have to file for insolvency, where will I file? So in case of companies, we will file it before. Heard about this? NCLT, I'm sure all of NCLT is come into existence, is already working now. I'm sure you understand that NCLT in Calcutta is close to the High Court, right? NCLT. So in case of companies, the case will go to NCLT. In case of non-corporate persons, the case will go to DRT. So the two adjudicating bodies are NCLT and DRT. NCLT will tackle companies as also all other bodies corporate which have a limited liability. For example, all other entities which have a limited liability. LLPs. So companies, LLPs, or even statutory bodies. Even a statutory body, if it's unable to pay its claims, one can file for there's nothing stopping. I mean, somebody filing, for instance, I'm taking an example, please don't mind if I'm using this. Let's say somebody says Life Insurance Corporation is not paying my dues. So I can actually file for insolvency of even statutory body also. Nothing stops me for filing for insolvency of statutory bodies as well. So that's insolvency and bankruptcy of individuals and non-individual on companies. Creditor remedies, for example, secured loans, SARFAESI Act action, will it still remain? Answer is yes, but as I mentioned, during the resolution phase, all these actions, including civil action, a lender might want to repossess asset, a lender might want to file a civil case, a lender may want to take SARFAESI action. All the actions will remain stayed during the resolution phase. So there will be a moratorium, like in SICA, I am sure you are aware of moratorium. Then when reference is pending under SICA, there is a moratorium by virtue of section 22 of SICA. So similarly, there will be a moratorium under the Bankruptcy Code as well. While the resolution phase is going on, neither can SARFAESI Act action be launched, nor can a repossession be taken otherwise, nor can a civil suit be filed. That's called moratorium under the resolution phase. Several sections will come into force. This is listing out sections which are coming into force. I'll move further to talk about brief idea about what are the highlights of the law. I think this highlight section will take care of a lot of, I will give a very quick glimpse of the entire law so that you can think of what is in the law is relevant for you. Under SICA, when do we say an entity has become sick? What's the basis of sickness under SICA? Any idea? Loss of net worth. Loss of net worth, right? As chartered accountants, auditors also sometimes they say net worth is lost. We'll put a note in the balance sheet that the company has become a sick company, and either the company has filed or the company is liable to file. In fact, there's also something called potentially sick company. If half the net worth is lost, then the board of directors have to make at least file a reference before SICA saying that the company is potentially sick company. So the existing benchmark of sickness is loss of net worth. That would mean the company's liabilities are more than the assets. Under this code, the test of sickness, the test of being insolvent is no more loss of net worth. Loss of net worth is not at all relevant. That would mean the company may be perfectly healthy, it might have a substantial net worth also. Yet, being healthy, the company has not paid its creditors on due date, then the creditor has a right to file for insolvency. I might be a 100 crore company, I might have a lot of net worth, I might have cash lying in my bank account, right? But if the creditor comes on a due date, demands payment of the amount due, and I don't pay it on due date, then the creditor has the right to file for insolvency. Is there any number of days grace period or whatever? I mean, do you expect that the lender will give a notice before filing insolvency application to say if you don't pay me within so many days, then I will go and file? So you are put to caution, you put to notice. Is it necessary for a creditor to give a notice before filing for insolvency? Once again, the answer is no. That is, if money has not been paid on due date, the creditor may, without needing any notice at all, straight go to NCLT and file an insolvency application. Now that's where the distinction between financial creditors and operational creditors becomes relevant. You recall sometimes, like I said, financial creditors. In case of companies, creditors are classified into two types: financial creditors and operational creditors. A financial creditor may, on the very evidence of a default itself, without needing any notice at all, a financial creditor may straight file for insolvency. An operational creditor will have to give a notice. For example, workers, if their money has not been paid, the workers will first have to give a notice saying, my money has not been paid. Is there a minimum amount above which only the action will be taken? Yes, there is a minimum amount. The law says an amount ranging between 1 lakh to 1 crore as the central government may notify. The central government will notify the threshold amount below which action cannot be filed, above which action will be filed. So let's say for a minute central government says 1 crore. So any default of less than 1 crore, there is no action under this law, and in default above 1 crore, there will be a possibility of filing insolvency application under the Backruptcy Code.
Sir, suppose a service is provided by one company to another company, and for that the payment is not being made.
Right.
And the second company goes and files a
Insolvency application. Right.
Yeah, and then the other company has is saying that the performance of the services was not up to the mark. That's why the payment is not made. And can he then, what should the action he take? When should he go and file a civil suit and there will be a stay in the like bankruptcy application?
Right.
Or
So,
liquidation application?
good question. This is what we call a case of disputed claim. Can we file insolvency application in case of a disputed claim? For example, some vendor comes and says, I supplied goods to this company and the company has not paid me or paid me my dues. The company says, Baba, you had supplied but everything was of bad quality. Apna maal to thik chilo na. Apna maal thik chilo na, our no acceptable nahi. Am I still liable to pay you? And if I don't pay you, am I liable to go for insolvency application? So that's what is called disputed claim. So if the claim itself is disputed, we say existence of a claim is the basis of insolvency application. There must be a claim. If there is no claim at all, there is no case of insolvency. So the idea is that civil claims, claim of civil nature, where the liability itself is yet to be established, that is not fit to be argued before the insolvency adjudicating bodies. The role of adjudicating bodies comes when there is an undisputed claim. Technically, of course, you will find the definition of the word claim. It includes disputed claim as well, but that is from a different perspective. We have at length argued this question. We are of the view that disputed claims cannot be, because you cannot use insolvency courts for the sake of civil claims. Civil claim, that is, we are trying to establish a claim, that's not a fit case for insolvency court. When I say our view, I don't know whether you actually had a chance. There's a fact book on law of insolvency and bankruptcy code, 2000 page kind of a book. This is my book with my co-author. So we argued this at length that disputed claims cannot be the basis. So Nitesh, this is also one of them. It's not on this subject itself.
Sir, suppose that whether this suppose since you told me that there is no notice is required to be given and I can directly go and file an application. So now that I have filed that application and then after that the other party
pays me, for example.
No, doesn't pay me,
okay,
and says that there is a fault intentionally. Says that there is a fault of not paying. Then what should that other party do and what should this person do?
Are you having some money due from somebody?
No, sir. I'm just asking.
That's good that you're asking. So, like for example, let's say you auditor of the company, your audit fees are not being paid. Audit with the কি করবে? Insolvency application করে দেবেন client করতে পারেন। The threshold amount, যদি ধরুন threshold amount is let's say 1 crore, and supposing audit fee is 1 crore, I'm not sure how many auditors will qualify at that. But supposing it is, then yes, you can. So I said in case of operational creditors, you first have to give the company a chance. So you give a notice to the company that if you don't pay me my claim within the next 10 days, I will file insolvency application. So once you give this notice, I am sure the company will come and say your claim is disputed. And despite the claim being disputed, if you still file a case under insolvency code, it may also be that the case is taken as frivolous application. So I am sure, please do understand, যদি ধরুন listed company থাকে and যদি কেউ insolvency application করে দেবে, stock market price কি হবে? Market will crash, isn't it? So the company will launch a counter claim against you that you caused a loss of my market capitalization, you caused my shareholders to suffer crores of rupees because of a frivolous application. So you will be under a threat to pay for damages to the company for filing an unsustainable case on account of frivolous application. So like I mentioned some time back, if the case is disputed, one should not use insolvency process to enforce disputed claim. Undisputed claim, for example, let's say it's a loan. Where is the question of dispute? There is a clear loan agreement. The clear loan agreement says the interest or principal is payable on the following dates. On that day, the company did not pay. Where is the dispute? And can I say that this is disputable liability? If there is a clear, so in case of financial claims, there is no case of a dispute at all. There is no need for notice either. Straight on the basis of a default itself, lender may go and file the application. There is no notice required at all.
Law of limitation is applicable.
Of course, applicable. Law of limitation is applicable. Time barred debt cannot. So debt has to be a valid debt. The debt has become time barred. There could be no action in respect of a time barred. The principle of Limitation Act is that people should not bring age-old matters and try to rake up age-old matters. People should not bring a case at the time of Mahabharata, you have done this, and therefore I am filing the case now. Because the principle is that those who prefer to lie down, those who prefer to sleep, they should do that at their own peril. They should not take the system to a jeopardy by remaining sleeping for years and you suddenly wake up and bring a case, historical case. So that's what time limitation law is still active.
Sir, if a lender files a surplusy act, that act, so how the borrower is protected and can go into insolvency?
So first thing is, who can file insolvency application? Insolvency application can be filed by whom? Insolvency application can be filed by 3 persons: financial creditor, operational creditor, and the debtor himself. That is the company itself. I hope all of you are okay?
Yeah.
So a creditor can file, financial creditor, for example, a bank can file, or as ma'am is saying, probably let's say supplier of services. Sorry ma'am, what's your name?
Madhumita.
So Madhumita is saying you can, even supplier of services may file, or the company itself may file. So the company itself, now you will probably ask, why would the company itself file? Company files the application for its own insolvency. Why would the company file a case for its own insolvency? কি হতে পারে company যে ফাইল করছে তা আমি insolvent. Of course, because that's for protection, self protection. তাহলে আমাকে ক্রেডিটর বিরক্ত করছে, আমি তো পয়সা দিতে পারছি না, আমার কি দোষ এর মধ্যে? And let creditors join together to see if there's a total solution. তার মধ্যে যদি আপনি আমাকে বিরক্ত করতে থাকেন, দেবো কি করে? Right? So issue is let the creditors join together and find a total solution to my problem. Until then, please don't harass me, because if you harass me, I cannot focus on my business. If I don't focus on my business, how will I pay? I have to earn to be able to pay. If you don't allow me to earn at all, how would I pay you? So the debtor himself may file insolvency application for searching for a holistic solution. So during this resolution phase, SARFAESI Act action will be stalled. So I'm just coming to the moratorium. So that's the next thing. First moratorium starts on admission of the insolvency application. যখন insolvency application admit হয়ে গেছে তখন first moratorium starts, and the moratorium runs for a maximum period of 180 days, 6 months. Under SICA, there was no limit on the moratorium. So moratorium was indefinite. But I'm sure a lot of people actually said that once you filed under SICA, you can relax for life. কোনো চিন্তা নেই, একবার SICA মধ্যে চলে গেলে সিবার কোনোদিন হিয়ারিং হবে না, কোনোদিন ডিসিশন হবে না, যতক্ষণ হবে না ততক্ষণ চলতে থাকবে। So one can indefinitely keep dragging a reference under SICA. So now the limit is there, maximum 180 days. This 180 days may be extended by another 90 days. So extension of 90 days, that is next 3 months, is permitted only on the sanction of creditors. So the creditors agree করে তাহলে 6 months থেকে 9 months হতে পারে, otherwise the upper limit is 6 months. Within 6 months the creditors must agree on resolving the entity. If they don't agree, then the next step will follow. So what's the next step? I'll just talk about it.
What is the BFR case?
The existing BIFR.
Company already
Existing BIFR cases will be withdrawn and will be refiled before NCLT. All existing BIFR references will all stand up. Big BIFR itself will get repealed completely. So BIFR will become defunct, and all existing BIFR cases will be refiled before NCLT. There is a process of refiling, so all cases will get refiled. Right? So now next thing is, supposing insolvency application has been filed, then what's the next step? First moratorium starts. Now once moratorium starts, what happens? Creditors will have to come together to find a solution. So the entire discretion is with the creditors. Creditors have an upper hand, they decide whether and to what extent will the company revive. So now there are 3 possible circumstances. Creditors are unable to agree. By 6 months have gone, creditors have not been able to agree at all. That's one sort of possibility. Another possibility is that even within the 6 months time, let's say tomorrow itself, the creditors come to a conclusion that nothing doing, we don't want to revive at all. Are you getting? Instantly after the resolution starts, creditors join together and they decide that we are not interested in reviving this entity at all. This entity is, let's say, gone case. It's not even a going concern, it's a gone concern, and we don't want to revive the entity at all. In that case, that's second scenario. Third scenario is that creditors have decided resolution plan, but the company did not act as per resolution plan. So 3 possible scenarios. Creditors unable to prepare resolution plan, or creditors decide not to prepare resolution plan, or the creditors prepare resolution plan and the company does not act according to resolution plan. In each of these 3 circumstances, we come to the next step, which would mean insolvency process will stop and we move to the liquidation process now. Now the company will mandatorily get into liquidation. So what I was saying some time back is that supposing the company itself, defaulter company itself files for insolvency, thinking that I am buying protection, I am seeking protection. So the company must understand that if creditors are unable to agree on resolution, then this is like, a point of no return. Once you filed for insolvency process, you are actually getting to a stage where you may not come back home at all.